Pogo owns an advertising agency, so his financial year ends on 31st May. He provided the following information for the year ended 31st May 20-1. So when I look at the items, first I would categorize them. Okay, two of them are the incomes, so they should be added together, and later on there will be one more income from the additional information, which I will explain later. So the first two incomes are fees received from clients and rent received from tenants. So let's look at the fees received from clients. Fees received from clients. Fees received from clients, it's 37,130 plus the amount due but not paid yet, 1,030. Why we add these two together? Because we want to find out how much is the amount that should have been received during the financial year. So we add this 1,030 to the amount that has already been received. So when you write the amount in the income statement, you have to put this as the working beside the account's name. Rent received from tenants includes 200, which was accrued from the previous year. So this 200 is part of the $2,300 that has already been received, okay, which was owing from the previous year, and also include $300 that is relevant to the next financial year. So based on your knowledge, you should know that this amount, we should not include them in the income statement of the financial year. So after making adjustment, you should only include $1,800 as tobacco rent received during the year, because 200 was relevant to last financial year, and then the 300 is relevant to the next financial year, so they are not relevant to the current financial year. Okay, then the rest office equipment does not have adjustment. Good. Rates does not have adjustment, but wages of assistant has an adjustment. What was the adjustment? The wages paid 180, which was accrued on 1st June 20-0. This is the opening financial date. Okay, on 31st May 20-1, wages accrued amounted to 210. So let's look at the wages of assistant here. Wages of assistant paid during the year was $19,500 minus the part that paid but is relevant to last financial year, 180, plus the amount occurred during the financial year but have not been paid yet. So we do the calculation. So the amount you should put in the income statement for wages of assistant is 19,530. So next we will look into what are the other income and other expenses which have not been included in the or calculated, okay, with the information given in the book. So what are they? Those are the gain on disposal and provision for depreciation of office equipment. So where you can locate this question is on the next page. On the next page, there's additional information 4, 5, and 6. And office equipment was sold on 1st September 20-0 for $2,200. So this is the cost of the office equipment. It was not given in the first part of the question, but it's given here. This had cost 3,650 and had been depreciated 1,560 at the date of sale. So what are these three numbers for? These are for you to calculate the gain on disposal or loss on disposal in other case. So you use the cost minus 105,560, which is the depreciation of the office equipment. Then we found net book value 2,090. This is the net book value. How do we minus it and get gain on disposal? Use selling price minus the net book value, which give 110 gain on disposal. You should include this as part of the income in the income statement, together with fees received from clients and rent received from tenants. Then number 5 is also related to depreciation. Number 5, new office equipment 4,200 was purchased on 1st September 20-0. So this is to be depreciated at the rate of 20% per annum from the date of purchase. Although it's mentioned percentage per annum, but it's highlighted to have the calculation from the date of purchase. So you can't just times 20%. We must count on from 1st September 20-0 to 31st May 20-1. How many months in between? September, October, November, December, January, February, March, April, May. So in total there are 9 months. Okay, for calculation we use the cost times 20% times 9 months over 12 months, which give the amount of depreciation $630. So this is another expense after you have listed the office expenses, rates, wages of assistant. You don't forget to add this provision for depreciation of office equipment. Okay, so after you list out the income expenses, you can find out the profit for the year for Tobago. Then what is number 6? Number 6 is not relevant to A. Number 6 is relevant to B. It's same with the cash drawings, okay, which is relevant to B. So if you do not remember how to prepare income statement and the capital account to record the profit for the year and drawing, please refer to this page. Please do not make assumption. You must ask question, look for the format, look for the right answers before you submit your answers to me. Okay, thank you.